Hello and a very warm welcome to Money Mind. Buying a house might be the last thing on your mind as the world battles the COVID-19 pandemic. Yet residential home sales outperformed expectations last month. We asked the experts if this is a one-off or if the momentum can be maintained. Then what's driving decisions in the commercial property sector? Also, living longer and providing for yourself. How the notion of retirement could be changing. But first, Jonathan Pires looks at what's ahead for the private property market. In the midst of all the bad news of lockdowns due to the COVID-19 virus, turmoil on global stock markets, and a potential oil price war, the positive data from Singapore's private new home sales market was a welcome relief. Developers sold 975 units in the month of February, not including executive condominiums. That's up 114% from last year and is the highest February monthly sale since 2017. Experts attribute it to a variety of factors.
Largely, what attracted the buyers were the absolute sum, which is kept manageable because of the unit sizes as well as the very competitive pricing by the developer. So in today's market, largely will be Singaporean buyers for obvious reasons of ABSD, but most of them are buying for the future. That means when for new project launches, buyers are not buying to flip. In today's market, it's impossible to flip. Most of them are buying with a medium to longer term perspective, and they would expect prices in the area to appreciate over time.
The top selling new launches were the M, Park Canberra and the mega development Treasure at Tampines. The M, which is located at Middle Road in the central area of Singapore, was the standout, selling almost 73% of its units on launch weekend. Experts say the price quantum definitely played a role, as 97% of all sales in the M are below 2 million Singapore dollars.
It is a decision that every buyer will have to make. And importantly, I think your capacity for risk. So if you can ride with the cycle and you find something that you really like, then I think they are willing to commit, which is why we have sales of more the smaller units, where in terms of risk management, I think it's more bearable for most people. But there's still a lot of liquidity in the marketplace and a lot of interest.
Another factor driving the market is low interest rates, after the US Federal Reserve slashed interest rates to near zero in a bid to stem the turmoil on stock markets. This in turn caused the Singapore Interbank Offered Rate, or SIBOR, to drop, which has an impact on the interest buyers pay on their housing loans.
What it means to me, if I'm taking a loan, I actually would enjoy substantial interest rate savings over time, and this is as good as a discount in the property price. So that's why for people who are making property purchases, lower interest rates tend to attract more buyers.
However, experts also caution that as the COVID situation worsens and Singapore is pushed closer to a recession in the second half of the year, demand for property may also face some pressures.
For example, the executive condominium at Park Canberra sold more than 300 units at the launch weekend, and the developer sold close to 65%. And we had it last weekend, the Ola, very well received, I must say. In fact, it was seen as the branded EC in Singapore, and yet it sold 30%. The take-up rate was half. And I would just attribute this to the current COVID sentiment. Some of the people are a bit more cautious, plunging into an investment that has got long-term obligations, and they probably wanted a greater clarity before making such decisions.
But for those who are taking the long view, there are certainly opportunities to be found in the current situation.
I give an example. Currently, one Pearl Bank they are trying to clear some of the available units, and they come out with one pricing strategy, which means to say, for example, from the 18th floor to say 28th floor or certain stacks of 10 floors, all are the same prices. You never get such benefits. Usually what you will see is every floor there's a loading of $5,000 to $10,000, and if there is a 10 floor difference from one stack to another stack, a buyer would have paid close to $50,000 to $100,000 more. But today it is no. You can choose the highest floor at a lower price as compared to some of the other floor at the lower sets.
Experts say Singapore's deft handling of the COVID-19 situation has also given confidence to investors looking to buy prime residential properties in Singapore. They think it's unlikely that developers will push back new launches despite the added restrictions and measures in place.
It is a very difficult decision for developers because you have that 5-year project completion period. Otherwise, your additional buyer stamp duty for the residential land starts to kick in. So that's something that they have to consider. And given that nobody really knows how long and how deep this is going to be, as far as possible, I think they would launch it. For instance, I think Luxus Hills by Bukit Sembawang, it was launched in March, and all the landed properties were sold within 2 weeks. And the average price of the intermediate terrace was above 3 million. So there is never going to be a good time. So while you try and time, there are also constraints that you have to look into, and also looking at your target market.
With more than 15 new projects in the core central region slated for launch this year, experts remain cautiously optimistic about the private property market.
With the turmoil we are seeing in the financial markets, most investors would stay away from the financial market for the time being, because that is something you cannot control. And also, that's why we see that for astute investors, they're actually moving their funds and resources into something that they can see. So property. So what's the worst thing that can happen to property market? The price goes down. But seeing the trends we have seen in the past, property prices come down in a crisis, the rebound is many times more than the drop. So the upside potential is a lot more than the downside risk.
Coming up, despite the COVID-19 outbreak, find out why rents for Grade A office space here in Singapore are expected to hold their ground.